This is For Advisors by Advisors. I'm your host, Evan J. Mayer, and today we have a very special guest in Mr. Josh Brown.
Oh, wow. The crowd is just going absolutely wild. This is amazing. Great to see all of you today.
It's awesome to have you on. Josh is the co-founder of Ritholtz Wealth Management, along with just amazing writer. I've been following you for probably 10 years. Your blog has been great. Your books have been great. I think this is your fourth book out. I'm excited to talk about that. But I thought we would jump in a little bit to your start in the business. You started in 1997, got your Series 7. You were a broker by all accounts. Back then, I think everybody was a broker. Financial advisors were not quite the norm. Today, it's abnormal to be a broker, at least new advisors joining the business. Talk about your transition from being a broker to then starting the Reform Broker and then starting Ritholtz with Barry in 2010 through 2013.
So I started out as a retail broker, which was a very popular thing to do if you were a young man on Long Island. It was, if you didn't know what to do with yourself, it was a way into Wall Street, and it was a white collar job, and it was just like an entry level thing where you went into an office somewhere. They handed you a black phone. They handed you a stack of index cards. Each index card had the name, phone number, and address of a business owner, and you would just dial. And I did that for a really long time, and I got pretty good at it. And I started to build a clientele. But what ended up happening was, after 10 years of that, I realized what I was really good at was selling people products, but that's not what people actually need. So I made the transition from registered rep, Series 7, to investment advisor representative, Series 65, in 2010. And I was able to make that transition because I had met my current partner, but then my idol, Barry Ritholtz, and Barry was at an RIA, and they were looking for people who could talk to clients. Barry was very popular at the time, but he was not himself a financial advisor. He had lots of people that wanted to give him money to invest, and he really didn't have a way to do that. So we teamed up, and I began talking to his fans who became our clients, and we built a nice little practice inside of someone else's RIA. And then in 2013, we had hired a couple of people to work with us, and the four of us said, you know what? We could do this by ourselves. We don't need to be at someone else's firm. Let's found our own firm.
How much AUM at that point when you guys broached off to your own?
Nothing. 60 million.
Wow.
Yeah.
And just said, we're diving headfirst into this.
The thing is that none of us, the four founding partners of the firm, had ever owned a business. So we didn't know what we didn't know. So when you launch a firm, all of these things then occur to you after the fact. You're like, oh, wait, we need a payroll provider, and we need an office lease. And this was our first time doing all of that stuff. So it was quite an adventure. Thankfully, I had the right people with me, and we divided up all the various tasks, and we all wore a lot of hats, and somehow, miraculously, we launched a business.
And how did you know about Barry prior? It's funny. We know, my generation, and I'm roughly your age, know you a lot more than Barry, just because we see you on CNBC all the time. We read your blogs, your books. We know you. We don't know as much about Barry, but Barry, you said, was an idol to you. When did you first know about Barry and contact him or get in contact with him?
So Barry was doing a blog. All right, let's back up. Barry was the first blogger on Wall Street. Barry was doing a blog before the word blog even existed. A lot of people don't know, but the word blog is actually a portmanteau of web log. And Barry was doing that before anyone had even defined it. He was writing on GeoCities, okay? And back then, you would write for 30 minutes, and then you would code it for 30 minutes to get something online. He then got a column at thestreet.com, which is where I first started to read his stuff. Jim Cramer brought him on, along with a lot of people today that are well known, but at that time he was obscure. But the column was, I think, the first to really delve into behavioral finance. And it's probably just him and Jason Zweig in the 2000s decade, talking about your money in your brain. And that was revolutionary at the time. Sometime around 06, 07, he had started his own website called The Big Picture, which still exists today. And on The Big Picture, he did something incredible. He literally predicted the financial crisis. And he had he had many insights, but this one very important critical insight. He said, and his mother was a realtor, which I think helped him arrive at this conclusion. He said, okay, here's a line going straight up from the bottom left to the top right of the chart. That's home prices. Here's a line going straight horizontal across. That's incomes. This is literally unsustainable. So one of two things is about to happen. Either every worker in America is about to get a 200% raise, or this whole thing will collapse like a house of cards. And that's literally how things played out. He was chronicling it 3, 4, 5 posts per day, writing about mortgages and credit and hedge funds and quantitative firms and bank failure and regulation. And he just owned that moment. And he did it on a blog. And he was on TV and he was on CNBC and he was doing Larry Kudlow every night. And so he had become very notable. Around that time, I had no idea what was going on. But what I did know was that the Wall Street Journal didn't get it. And the traditional television networks didn't really get it. So I turned to Barry as an information source. And then one day I said, you know what? I could write a blog too. I'm not as smart as Barry or as experienced, but I have opinions. And so through the blogs is how we met. But Barry was my North Star during that, trying to talk to clients and explain to them how the crisis was happening in real time. I relied heavily on The Big Picture. And then in 2010, I got invited to an event in California. I borrowed money so I could fly there because I was just done on the heels of the financial crisis. And my father-in-law wrote me a check and just said, go meet your idol. And that's probably the most important decision I ever made career-wise, was to fly out there and spend time with him. And it turned out he needed my help as much as I needed his. Keep in mind, he's got #1 best-selling book on the crisis, the first one, called Bailout Nation in 2009. That's the biggest book there is. And he's got his phone ringing off the hook because he predicted it all. So everyone in America that had been reading Barry is like, Barry, just take my money.
Yeah.
And he has no way to do that. He needed me, I needed him. We started working together at the end of 2010, and it was just lightning in a bottle from there. It worked immediately.
That's amazing. And not only that, but you meet your idol. You're both phenomenal writers. You then create this RIA with 60 million, and literally within a 12-year period, you just surpassed $5 billion of AUM, 10 locations throughout the country.
11 years.
11 years, yeah. But it was when I was reading on that, it said 2010 through 2013. But the formation is just absolutely amazing. And it's interesting because when I watch CNBC and I hear you talk about behavioral finance, that is really our job today. Like today, it's not necessarily the investment selection. That's pretty, at the end of the day, the tools and technologies to research are just amazing. But the behavioral finance is a big key. And the interesting thing is that when we see you on the shows, that's a big part of what you talk about, where the other people on the panel maybe are not pure financial advisors in that sense, that they're dealing with retail clients or high net worth clients on a day in and day out basis.
I have to tell you, if you look at the evolution of the show that I'm on CNBC, what I'm most associated with is the Halftime Report. The evolution of the casting of that show bears out what you're saying. And we won. Like, our side won. Every person on the show now pretty much is involved with an RIA. When I first got cast onto the Halftime Report, when it launched in 2011, I was the only financial advisor on the panel. It was guys trading options, it was hedge fund, it was macro. I was the sole person that was an RIA person. And now, turning on any given day, 5 days a week, everybody on the panel is working at an RIA, represents an RIA pretty much across the board. And I think that speaks to the evolution of the investing business. So I wrote a book in 2012 called Backstage Wall Street. And one of my predictions was you are going to see everything heading toward the fiduciary standard, all the money, all the talent, all the energy, all the enthusiasm. And that's exactly what happened. In 2012, we were still in this brokeragey, hedge fundy era. And it's been just a dramatic shift.
But even you can even say during the pandemic is actually when you started to see that shift even more. At least that's when I started noticing, oh, he's an advisor. Oh, she's an advisor on that panel, which I think is interesting because it maybe COVID, maybe that down market of, hey, stay the course, you'll be okay. And 2 months later, the market pops back up. Maybe that was the evolution to CNBC making that switch, but it's been an
I don't think it was deliberate. So I don't think it was like, I don't think there was a meeting where the heads of television were like, we need to get more RIAs. All of the people that were cast members on the show, their careers took them in that direction. So let's take Stephanie Link as an example, who I think is the smartest person on the show. Stephanie is incredible. When I first met her, she was Jim Cramer's research partner on thestreet.com. That's what she was doing. And then she goes to an asset manager, Nuveen, TIA, but they branded it as Nuveen. Yep. Then she ends up at Hightower, which is a platform for RIAs. Look at Jim Lebenthal, another fantastic member of the cast. He is at Lebenthal Asset Management, the family business. Now he's at Cerity Partners, which is the giant platform for RIAs. Go down the list. This is not an editorial level decision at the network. This is the natural career path for people who are evolving with what the industry has become. And the options people are gone. The global macro, the currency traders, they're not on the show. And I think that's reflective of what has happened on Wall Street more than anything else.
So let's talk about that for a moment. You're on the show, and a lot of times they ask you for your picks, right? And you got to basically call out a stock. And as well as any financial advisor, that when you do that, clients or people are going to ask you specifically about that stock. Should we be putting more money in? Should we be putting less money in? Things along those lines. Going away from the behavioral finance part, do you ever feel when you're doing that, you just want to include, hey, guys, this needs to be a small portion of the portfolio? Obviously, it's the show is meant for that. People watching the show on a day in and day out basis. You have all kinds of people obviously watching the show, but I'm sure you have clients that call you afterward or during that show saying, why don't we have a higher percentage in that? You had so much conviction on that one stock.
My clients are really smart. They're blog readers. They're people that are very thoughtful. They're highly successful. I think the most important thing is I don't give advice on TV. I don't get paid by anybody who's a television watcher. If you're not a client, I'm not giving you advice. Yeah. That's the first thing. Second thing is the way that I speak, I make it very clear. This is what I am doing, me. I have my own investment policies for myself. I wrote a book with Brian Portnoy in 2020. It came out at the end of 2020 called How I Invest My Money. There's 20 chapters in there, many of the chapters written by financial advisors. And we asked and we gave people the opportunity to tell the story of how they invest their own personal money. Not what do you tell clients to do? What do you do? And it's amazing, chapter after chapter, people telling these very personal stories, either from their past or their present, that lead to, here's why I do things the way that I do things. And some of them have really big cash balances, and some of them diversify and they don't do stocks for themselves. They only do real estate. And there's just like this whole litany of rhyme and reason that goes into it. I don't have the same investment objectives as anyone else. I have my retirement portfolio invested in the same models that we use for all of our clients. And then I have a portfolio of individual stocks, and I love stocks and I own them forever. I'm in Apple, Berkshire, JP Morgan. I'm some of these stocks over a decade.
It's funny you mentioned that too, because not all advisors take their own advice, and good advisors tend to at least have a big portion or at least half their portion in the models they run because they have conviction in those models.
Pretty much all of our employees are invested in their 401k utilizing the same investment strategies that we profess to use for clients. It's a philosophical solidarity, and I think it's really important.
As your firm is growing, Do you still take on clients? And when did you make the shift to, if you did make the shift, to say, I need to focus more on helping our advisors, helping our firm grow, and less on dealing with the day-to-day management of clients? When, was there a specific AUM that happened or a specific decision?
I'm not the advisor for any client.
Now,
So that was
from day one, even
I have
the
25
start?
certified financial. Yeah. I have 25 certified financial planners at the firm. And it's the worst thing you can do from the client service standpoint is act like you're focused on their retirement and be focused on other things. So if you are a client of my firm, you have a dedicated certified financial planner. That person, he or she owns the relationship and is responsible to the client and everything that happens that has to do with the client. They're not out there running around doing podcasts. They're not at charity galas trying to rub shoulders and bring in business. We don't have advisors who are responsible for rainmaking or networking or hobnobbing. Our advisors have one responsibility. The fans that come to the firm and ask us for help, they take care of those people like their livelihoods depend on it. And it's a really great,
sure.
Yeah, it's a really great example, I think, of teamwork. So I'm much more responsible on a day-to-day basis for managing the firm and the messaging around the firm and making sure that what we say publicly aligns with what we do internally. I meet clients all the time. Advisors set up meetings. I can jump into those meetings. I can have conversations about economics, politics, the markets, whatever people want to talk about. But when it comes to actually executing financial plans and making sure that portfolios are aligned with those plans, I have, I think, 25 of the best certified financial planners in America who own those responsibilities.
Phenomenal. Let's talk about your books, and let's talk about the new book. The new book is very exciting. What would be a trigger that you could, and keep in mind our audience are financial advisors. What are some things that investors should know on Wall Street, but really what are things that advisors might not know that behind the scenes by being where you are?
So the book is the culmination of 15 years of building a financial advisory firm, learning from my own mistakes, commenting on markets on a pretty much a daily basis, thousands of blog posts that I've written. And what I've tried to do with the book is take the biggest lessons, secrets, tricks, stories that people probably had no idea. Like I take people behind the scenes and I show them, okay, this thing happened, but here's the backstory of why it went that way. Or here are some of the conversations that were happening behind the scenes during this specific event. And people love that stuff because I have a very unique vantage point. I've been around, I've met everyone on set often when like major events are happening. I'm down at the New York Stock Exchange. I was at the exchange the day Jack Ma came to take Alibaba public. At that time, the biggest IPO ever. I was at the exchange when Twitter came public. I was on set in Englewood Cliffs, New Jersey, when Bill Ackman came on to try to save his Valiant trade that was blowing his phone. Like I'm in the room. I'm in the green room. I know everyone. I talk to everyone. And I thought a lot of the stuff that I've seen is stuff that everyone else isn't meant to see. So I wanted to do a book that brought people a little bit behind the scenes and contained within it a lot of important truths and lessons about what really happens in this business. So I think I pulled it off. It's not a book that disparages anyone or settles any scores. It's really just more about, hey, let's not forget, in the end, these are all just regular people. Incentives drive their behavior. Sometimes emotions drive their behavior. Sometimes it's a mix of both. It's jealousy, it's envy, it's bitterness, it's excitement, it's greed. It's like everyone involved in these stories is just a person. And so I try to humanize a lot of the big events that have happened on the street. And I get into technicals versus fundamentals. I get into active versus passive. I get into the rise of the ETF and then the rise of custom indexing And all of these topics that are super important to advisors, I think I give them a perspective that they haven't seen before.
That's awesome. You're writing this book. Is there ever as you're going through and you're writing about a specific storyline and you're like, man, I just really want to share this, and you do blogs and you do podcasts. Is there ever that part in you that's, hey, I got to keep this for the book and I can't share this, and I really want to share this now?
No, because I almost can't control my mouth. I just, it's not, there's no premeditation. I just say what I think, and it's not always popular, and it doesn't always go over well. And sometimes I'll burn a bridge or two. But I don't think I'm like a particularly offensive person. I'm not in fights with anyone. I don't have any enemies.
Did you have to make any, did you make any calls when you were writing about something specific that happened and just got the okay, or said, hey, I'm going to be.
No, if it happened, but what I'm not doing is like going after people. I don't have a personality where I think I'm like better than anyone else. So I try not to. I shouldn't say I don't. I tend to not sit in judgment of other people and act as though I'm in this position of moral superiority. I've made as many mistakes as anyone else in this business. What I try to do when I say humanize the events that have happened in the market, I really try to be considerate about what made so-and-so do so-and-so, or what are the reasons why people got something wrong or right. Or when I write about people's success as frequently, if not more, as I write about people's failures. And overarchingly, if you read this book, you're going to come away saying, this guy is very in touch with his own failure. This guy is very in touch with all the stupid things that he's done, and he's hyper aware. So it's super personal to me, Evan. I don't write coldly and analytically from a distant remove. I'm there, and I own my own mistakes, and I'm not scolding others for making theirs.
As I've grown in the business, and just maybe it's the age that I'm at and the age that you're at, we talk about imposter syndrome. And
what, 25?
Yeah, exactly. We're doing our best to keep looking that way. Imposter syndrome is something that I think people deal with. You've been on the set now for a long time on CNBC. You're well known in the business. Has that gone away? First of all, did you ever have it? I'm sure you had it at some point. You never had it.
No, because if go back and read what I was writing in 2008-9 on my blog, I was just like, here's my deal.
So even if you
retail stockbroker from a third-tier firm, I don't pretend to have a pedigree.
No, you never pretended. But if you meet a Bill Ackman tomorrow and it's your first confrontation with him, your nerves never settle in, or none of that.
No, because I've seen too much. So I know how talented and brilliant people on Wall Street can be, but I also know how twisted even people that have had massive success to this day. You think about people that have $1 billion or more in personal net worth, and they're tweeting, like they're like trying to, it's almost like the likes are more important than all the success that they've had off of the internet. It's almost like disturbing to see the degree to which it's not enough that they've won the game of life in a way that is like, their descendants will be wealthy forever. They will never have to struggle the way regular people struggle, other than with health at some point and eventually death. Outside of that, they literally have nothing to worry about, and they can't help themselves. They also need to impose their political views on literal nobodies on social media. It's crazy to me.
It's funny. It's funny you say it too, because as you're saying these people that you've had experiences with, the faces and the names are coming into my head, and I'm wondering if he's talking about that specific situation. And obviously, there's a few people.
The point I'm making is that I understand there's no imposter syndrome, because I now understand that success and money and resources and popularity do not fundamentally change the person that you are. They might amplify the best or the worst traits of the person, but they don't change, and everybody is flawed. I'm first on the list, but everyone. So I don't get nervous or intimidated. I also have come to recognize the role of luck. There are a lot of people who have done really well for themselves, and either they'll say it or they won't say it, but I know it's true. They were in the right place at the right time. They serendipitously met the right person. or they chose to work on the right project at a very important moment, whether it's technology or it's what. There's the role of luck in success. It can't be replicated, and it doesn't take away from people's success, but I know that it's a factor. And so once you get that through your head, that a lot of people who have been very successful or very unsuccessful, there's been some randomness that's enabled that to happen, good or bad. And once you recognize that, I think you tamp down like the nervousness about meeting people.
Or you humanize them to some extent. We're all human, and you bring them down to that level. Hey, talk to me about, you were on Billions, and obviously as a financial advisor, we love that show, right? We all love that show. You were on that show. Talk about your experience with Axe, and just like, was it, I'm sure it didn't feel any Wall Street. It didn't feel like Wall Street when you were on the set.
Brian and David, the creators of Billions, gave me a shot to help out on the show as the technical advisor. So I would get sent the scripts before, I think even before the actors got the scripts. And my job was to just make sure that if there was dialogue that was related to, because it's really two shows in one. Half the show is characters that work at the hedge fund or investment banks or traders. The other half is like U.S. attorneys and on the legal side. So they didn't want my opinion on that stuff. But if a trader was making a statement to another trader, or if they were coming up with a plot and they were trying to figure out, is this an interesting problem to set up for the characters? And it had to do with the structure of the fund or the way the market was acting. I had to make sure that dialogue rang true. So I did that for seasons 4, 5, 6, and 7. It's about 5 years of reading scripts and submitting notes. And I got to visit the set a bunch of times. And then one day I saw my name as a character in one of the episodes in season 4. It's called Fight Night. And it was really cool. We filmed a couple of scenes at the NASDAQ market site. We had to film it on Martin Luther King Day when the stock market was closed. It was like negative 20 degrees. I was in a trailer outside of the NASDAQ in Times Square. But Damian Lewis came in to be in the scene with myself and Scott Wapner. We also got to meet Taylor. They were the actor that plays Taylor was on set. I was not in the scene with Taylor, but we basically got to play ourselves, but in the television world version. So it was really cool. And then I was at
and you had Scott there with you too, which was probably made it feel a little more normal.
Yeah. And then later in that same episode, it's called Fight Night because 2 of the characters were in a charity boxing match. And that was filmed, I think a few days later. It was filmed down at the Bowery in the big, I forget what the place was called, maybe Bowery Ballroom or something. But they had not just me. I was in the audience eating a hot dog. That was my big contribution to that scene. They had Deontay Wilder, who at that point was the heavyweight champion of the world.
Yep.
They had Tim Ferriss. They had Jocko, famous podcaster. So they had a lot of people like me that were just like milling around, like waiting to have a cameo in the scene. So it was so cool. It was one of the coolest experiences I've ever had. And people still watch the show. They had the series finale a few months ago, and I got to pop up in that too. And I'll never be able to thank Brian and David enough for including me in that adventure and letting me help shape the dialogue on the show.
Excellent. Hey, it was super awesome having you on. I wish we had another 30 more minutes because I got a bunch more stuff I would ask you, but
we'll do it again.
Yeah, absolutely. Where can people get your book? And if there happens to be an advisor out there that looks at your firm and I would love to be a part of that, what's a good way to contact you?
It's so funny. Like they talk about efficient markets. The advisor career marketplace for careers is the least efficient thing I've ever seen.
Sure.
We built a paradise for our advisors. And if advisors not working at my firm understood what we were doing for our CFPs, they would be like literally kicking the door down. But we only hire 1 or 2 advisors a year. We're super picky. We don't have the capacity to start acquiring firms and doing all that stuff. But if you get in, you're really lucky. And if you want to talk to us about your career, we'd love to have the conversation. It's ritholtzwealth.com. The book is available at fine airports everywhere, in addition to Barnes & Noble and Amazon and all the places that you would normally find a book. And
you have the audiobook out?
The audiobook is out, and I read it myself.
Excellent.
And I don't know if I'll ever do that again. I love how it came out. That's the most work, is like reading your own chapter into a microphone and then going back and fixing all the words that you mispronounced or what. But anyway, I performed this thing. I didn't just read it. So the audiobook is, they say, publisher Harriman House told me that 50% of the copies you'll sell will be audio. So I guess in 2024, people are listening as much as they're reading. So
I read more books in the car than anywhere. Yeah, absolutely. Awesome to have you on. Amazing success. Congratulations on everything you've done, accomplished. Keep writing good stuff. Keep being honest. Keep being you. And we appreciate it. For the advisors out there, hope you enjoyed today's episode, and we'll see you on the next one.
thank you so much.